Hello class. This week's assignment is going to be dealing with a cash flow statement. This particular video is going to be designed to kind of give you an introduction of what a cash flow statement is and how it all really works. This in no way is a comprehensive video of a cash flow statement, and accounting classes would actually be a better class to really understand exactly what a cash flow statement does and how it works. But this is just going to be a basic overview. Basically, a cash flow statement is one of three financial statements. It also includes income statement as well as a balance sheet. But what a cash flow statement's purpose is to show all areas where revenue is received and then cash is spent. And for a typical cash flow statement, it's divided into three main sections. The first one is a cash flow from operating activities. This is going to be dealing with what kind of revenue did you receive from your business in terms of actually what did you produce? Did you make any money off of receipts from sales? In the agricultural sector, this revenue from operating activities could actually come from stuff like crops, livestock. Did you sell bulls? Did you sell calves? Did you sell cull cows? What else did you sell? What kind of receipts did you have? And then you have the expenses from operating activities. These are going to deal with stuff like labor, fuel, feed, seed, stuff like that. The next main section is you're going to have cash flow from investing activities. These are going to deal along the lines of, did you receive any money off of assets in this business? Or what was your expenses on assets for this particular for this particular business? The last and final main section that it's going to have is cash flow from financial activities. This is going to deal a lot with, did you have to take out an operating loan? What about the payment of the operating loan in the final years? So what we're going to do now is we're going to kind of go through this cash flow statement, hopefully fairly quickly, to kind of break it down piece by piece. Again, this is not a comprehensive lesson on a cash flow statement. This is not designed in any way to actually replace your accounting classes, but this is just a basic overview of a cash flow statement so that you'll be able to complete the assignment this week with hopefully relative ease. So the first thing I'm going to talk about is the cash flow from operating activities. This is the first thing that we're going to look at. So we're going to talk about, first off, revenue from operating activities. What kind of receipts did you receive? Typically in the agricultural sector, you'll sell your crops, steers, heifers, your livestock, or the offspring of the livestock, I should say, such as calves and chickens and stuff like that. Anyway, so what these receipts are is going to go into your revenue from operating activities. Say you have a farm and you go ahead and you sell corn, and you go ahead and receive these receipts from this corn. That's going to be your receipts from your crops. So that's actually going to go into this revenue from operating activities. What kind of receipts did you make off of the products that you actually made? And then, so you may have several lines, say a line for crops, a line for livestock, a line for another enterprise that you may be in, and then you add that all up to find out the total amount of money that you receive. What is the total amount of revenue that you received from selling products that you made? And that's going to go right here. That's going to be the sum of all the receipts from crops, livestock, etc. Then you're going to deal with these expenses of operating activities. What are some of the expenses associated with actually producing these products? Well, in the agricultural sector, you have stuff such as labor, fuel, feed, seed. Another expense that you may not think of right away is income taxes. How much did you have to pay in income this year? Because the taxes really and truly are a cost. And that's going to be a cost to produce these particular products. So that's going to be your expenses from operating activities. Income taxes included in that. What about an interest expense? So say you had to take out a loan, an operating loan, and it's at a 5% interest, and you took out $100,000 in an operating loan. Well, you've got to pay that 5% interest back. Well, that's actually going to go into expenses from operating activities. This interest expense. What is this interest that you paid on these particular loans? Because that is a cash expense. So then you add up everything to all right here to come up with your total expenses. Your total expenses from operating activities. So the next thing you're going to do is you're going to calculate the net cash flow for operating activities. To find that, you simply take the total amount of receipts minus the total expenses to come up with the net cash flow for operating expenses. So that's going to be this first main line. How much did you make off of this particular operating activities? Did you make money off of your crops and livestock? Did your farm actually make money, or did you have more in expenses for the operating expenses? And that's going to show this net cash flow for operating activities. Now the next thing we're going to talk about is in cash flow for investing activities. Investing activities deals with your assets. So you have a revenue from investing activities, and then of course you have your expenses of investing activities. Now this is going to be key because we're talking about assets. We're investing in assets. Whereas up here we're talking about how much did you make from the products, what did it cost to actually make those products. Here we're talking about the assets that go into making these products. So whenever we think about assets, we need to think about land, we need to think about equipment, fence lines, anything that's actually an asset. So believe it or not, a fence line is actually an asset. So whenever we talk about revenue from investing activities, we could talk about asset sales. What kind of money did we make off of selling assets? So did we sell equipment this year? Did we sell a tractor? Did we sell a rake? Something like that. If we sold that, then that's a revenue for investing activities. If you sold bonds, or if you sold stocks, if you sold some kind of other investment, or if you just sold an old piece of equipment for salvage value, that would be asset sales that goes into this revenue for investing activities. And again, you'll add up these total receipts, this total revenue from investing activities. Then you have expenses associated with investing activities. What is it costing you for these assets? So if we think about it, what about land payments? If you're having to pay for land, if you own this land, if you bought this particular land, it is now an asset of yours. Now if you were leasing land, that would actually be an operating activities expense. But if you own the land, now it is your own land, it's an asset, but you still have to pay it off, that would actually be an expenses from investing activities. What about equipment payments? If you are paying $500 or $1,000 a month for a tractor, that would be an equipment payment. That is a cost associated with acquiring more assets. So that would be an expense under investing activities. If you are, say, a livestock producer, going out and buying livestock, buying breeding bulls, buying breeding sows or breeding ewes or anything like that, that is an asset to a farm or a ranch. That would actually be considered an asset cost. Something like buying a high quality bull. Maintenance and repairs on equipment. That is the cost of upkeeping investments, these assets. That is an investment activity. So then you come up with your total expenses, and then of course you take the total amount of receipts that you made off of these investing activities minus the total expenses to come up with your net cash flow of investing activities. The last main section I'm going to talk about is cash flow for financial activities. So, financial activities generally deals with loans. For this particular assignment, we're going to be talking about operating loans. Oftentimes in agricultural sectors, you have to withdraw operating loans. So, if you take out an operating loan, and you take out this loan, that now you've got say you took out an operating loan of $50,000, you now have $50,000 in your account to spend on what you need for the operation. That's an inflow of cash. That's actually, you can think of that as revenue from this loan. You now received more money in your account due to this operating loan. So that's going to be your total receipts from financial activities. How much did you receive for loans to be able to fund the business? An expense of this for financial activities would be a repayment of these loans. So now say you took out a loan in 2015, you have to pay it back since it's 2016 and it's a 1-year operating loan. That would be an expense under these financial activities. So that would be the total expenses for financial activities. So of course you add up all of the amount of receipts from financial activities, expenses. Once again, you take the receipts minus the expenses to come up with the net cash flow for financial activities. Now the next thing you're going to do is you're going to figure out, did you have a net increase in cash, net decrease in cash, or what exactly you had. So if we look at this and say, to find out if we had a net increase in cash, or net decrease for that matter, what we're going to do is we're going to take the net cash flow from operating expenses, the net cash flow from investment activities, and then the net cash flow, from financial activities, and we're going to add them all together. And that's going to give us the net increase or decrease in cash. Then we're going to figure out, what did we have at the beginning of the year? What was our beginning cash? What did we have in savings? And then we're going to add the beginning cash to the net increase in cash to figure out if we have what our ending cash is. So let's say, for example, we're going to hope that the cash flow from operating activities is going to be positive. So let's say that line 3 right here is $100,000. Well, say that we invested a lot into this business and really didn't sell many of our investments, so we have a net cash flow of, say, negative $50,000 right here. Say we spent, or we sold $50,000 worth of assets, but we bought $100,000. We've made $100,000 up here, to where we have a negative net cash flow for investment activities of, say, negative $50,000. And then down here under financial activities, say we have a net cash flow of negative $20,000, hypothetically, okay? So then we come down here and we add those three numbers together. We have a positive 100,000 minus 50,000 minus 20,000 to give a $30,000 increase in cash. This is all very hypothetical and very quick and rough example of a cash flow, and these numbers are quick and rough, and I'm sorry if I apologize if I'm going through this too quick. But so we're going to get a, right here, say we have a net increase in cash of $30,000. Where down here we had a beginning cash of, say, $50,000. Now our ending cash would be $80,000. So the purpose of that little example is, I was trying to explain that lines 3, 6, and 9 are not always positive. They can often be negative, and they can all be highly negative, and sometimes they can all be highly positive. And you can actually have a net decrease in cash. It's often denoted as a net increase in cash, but this may actually be noted as a negative number. And then your ending cash could actually be negative, where you have to take out an operating loan, which might actually go back into this financial activities. But say you want your ending cash to be at a certain amount. Say you want it to be at $50,000, and down here ending cash is at only $20,000, hypothetically, but you need to have $50,000 ending cash. That'll actually be a good indicator as to whether or not you need to take out an operating loan for the next year. And that'll actually be covered in the next video.